Hi, Andrew Bell. Great to be with you again, and today's a real treat. We're down here at Garfield Terrace in Surfers Paradise, and behind me is the site of the new Arc development. Brand new building of just 37 apartments. We've got from a level 1 to a level 16 half floors, and from level 17 to 22 we're 4 floors, and then 2 levels on top of that for the penthouse. The half floors are 217 square metres. That's big. And of course, nearly double that at 414 square metres for the 4 floors. So many special features. I couldn't do it justice here today. If your interest is there, to be right on the absolute beachfront, tremendous position, halfway between Surfers Paradise and Broadbeach, a beautiful pocket of residential properties, absolute beachfront. On the screen now is Caitlin Rosenblum's contacts. She's a person of contact and she'll give you more information. So, moving on with my report for this week. First is the state of the Gold Coast real estate market. It's different, no question about that, but it's healthy. The fundamentals of real estate are always about supply and demand, interest rates, unemployment, and consumer confidence. Now, in relation to the supply and demand equation, it's just become so expensive to build brand new properties that we're not building anywhere near the volume that we need. And so the underlying trend is a shortage of properties in the marketplace, right across Australia, but to different degrees in different markets. Now, with the Gold Coast population growing by approximately 15,000 people per annum, you can see where there's a real problem here. We're simply not building enough, and we're seeing developers constantly either scrapping their development, going to administration, and just staying clear of it altogether, and certainly not building affordable ones. This is one of the rare ones that is getting built. Now, on the demand side, we continue to see the migration, and that's what's driving this 15,000 growth per annum. Now, interest rates. The main driving rate, of course, is inflation. Now, we're going to keep a close eye out what happens throughout this year. All forecasts are that we will not benefit from the tariff wars. They'll impact on our inflation in a negative way. Whatever interest rate drops we do get this year, they won't be anywhere as much as we like or as big as we like. And so whilst we might get this break, it won't change the market significantly. On the surface, unemployment doesn't seem to be an issue at present, but keep a very close eye on it as it turns relatively quickly. It has a strong relationship with interest rates because when unemployment rises, interest rates fall. But when unemployment is high, it feeds into higher inflation and therefore feeds into higher interest rates. So what we don't want is unemployment. So the real key to watch out now for is the March CPI figures, because that'll really give us some greater idea about what's going to happen. We've also got the upcoming budget, and that'll impact on interest rates as well. Now, consumer confidence is okay. Get ready for it to take a bit of a battering during the election campaign. Both sides of politics do all they can to do fear-mongering, and polls will increasingly tell us about hung parliaments, minority governments, and it does knock consumer confidence around. Now, something that's interesting that's just been occurring, Ray White, of course, which is the largest company in Australasia, has conducted 1,900 auctions since the 1st of January. That's up 28% for the same period compared to last year, which suggests that many property owners are opting to sell their properties now, and the pleasing fact is that 73% of those have either sold on or before auction day. And of course, so many more sales occur straight after auction as well, placing the success rate up in the 90% plus range. Significantly more success than property selling by private treaty. So there's a kind of a mixed up set of circumstances. I guess what we're seeing at the moment is the market is still good, despite some headwinds that are out there. We're likely to see a little bit of messiness over the next few months where we have a federal election coming in. Of course, we got the Easter period coming up. We're switching out of summer into autumn. There's just some seasonal factors come into play. But I think at the bottom of it all, when you push all of that aside, there's just this fundamental need for people to have homes. We've got the migration here. And of course, there'll be a lot of people likely to get away from our southern states for their winters. So I think we're in a good spot. Interest rates definitely have peaked. We're likely to see a continuation, albeit at low levels. If we got a 1% drop for the whole year, that's all we could hope for. But I'm not even sure we're going to get that. But we've turned the corner in terms of interest rates, and I think we're in a good position. The Gold Coast has never been in a better position than it is now. And I think we're starting to see people warm to that concept in greater numbers than ever before. So I'm looking forward to 2025. I think it's going to be a great year for the Gold Coast. And we'll look forward to looking after you or any of your family or friends throughout the course of this year. Till I'm with you again in a fortnight's time, all the very best.